I'm John Taffer, and you're watching another great episode of Taking Stock.
2 minutes to go into the close here on this Friday trading session here on Wall Street. And at this hour, just moments ahead of the closing auction here at the New York Stock Exchange, we are seeing the major market indexes actually in mixed territory, but all things considered, given everything, and I do mean everything, investors had to digest on a busy news day. We're looking at positive gains for most of the indexes, with the notable exception of the Russell 2000. The small caps look like they'll finish in negative territory, but the S&P 500 up about 0.7, the Dow 30 up about 0.4, the New York Stock Exchange Composite Index in on the party up 0.4, just despite the fact that investors had to digest a softer than expected Q4 GDP print, only coming in at 1.4%. Far below Wall Street's expectations. We have the U.S. Supreme Court striking down the Donald Trump tariffs. That is certainly a storyline. It's simply not going anywhere anytime soon. And finally, it is also options expiration Friday. Happens down here at the big board. The third Friday of every month. It usually brings with it a lot of volume, a lot of chop and volatility into the close. So anything can happen in the next 45 seconds. Telecom, discretionary, and real estate. Those are your strongest performing sectors in the S&P 500 today. 9 of the 11 sectors set to finish the tail of the tape in positive territory. We do have losses to the downside led by energy, healthcare, as well as staples. We have an incredible broadcast here on Taking Stock for you on this Friday edition. The team from SheTO set to do the honors. They'll also join us on the broadcast. We will pick up our ongoing market coverage right after this. Time now for the belt. That was awesome. I'll be honest, I've been here for thousands of these. That's about as good as it gets. Your final tail of the tape on this Friday, the 20th of February, the S&P 500 up 0.7, the Dow up about 0.5%, the NYSE Composite Index up 0.4. The small caps will be in negative territory, not by very much, however. The Russell down 0.05%. Volatility down, yields up across the board, both the short end as well as the long end of the yield curve. Gold and silver both moving up, not big dramatic moves for the precious metals. Silver currently right around $83 an ounce. The oil benchmarks in retreat, the crypto majors higher. Amazon, Apple, and Procter & Gamble, those are your strongest performing names in the Dow 30. The laggards include Walmart, Johnson & Johnson, as well as energy giant Chevron. Let's bring in our first guest of the broadcast. He joins us remote. This is David Russell, Global Head of Market Strategy at TradeStation. David, thanks a lot for being here. Investors had no shortage of things to try and digest ahead of today's tape. I got to get your perspective here, David. What were your top takeaways given that 6-3 Supreme Court decision with regards to saying, hey, Donald Trump's tariffs, not so fast? David, your thoughts?
Yeah, I think, JD, it just shows that we have bad news. It just does not really play out. Everyone was expecting this to be a big issue over time. Most people, I think, thought that, tariffs could remain more of a risk, and it just kind of evaporates. And I think what we're seeing here in this market is that the macro situations are really not the bigger driver. We have monster earnings growth right now, with double-digit earnings growth expected every quarter this year. And I think that's the real thing we need to be focused on. We still have the AI trade remains in place. It has some tarnishes. But ultimately here we have an economy that, despite what the GDP says, we're seeing the industrials perform, we're seeing earnings growth, and overall these numbers, and I would say the overall macro news of even things like tariffs, they're just not that important, because right now we have some very significant earnings growth, and that's really what's driving things.
David, you mentioned earnings. You mentioned the durability of the current AI trade. That teases up perfectly for the earnings calls of all earnings calls. We get it next Wednesday. How about NVIDIA? What are you paying attention to one of the most consolidated, one of the most important names in the S&P 500 next week, David?
Yeah, it's been trapped in this range here. And I think right now the thing that's very interesting is look at the big names like Micron and the other companies that are related to that overall business. There's another one, VRT, recently had strong earnings. These companies are not showing any kind of weakness. that you would expect if there was going to be any problems with Nvidia here. So I think it's one of these things when everyone wants to be worried about what might happen, but we see this in tech when things sit and they pause, and then the good news comes and they all rush. So right now, this is behaving very much the way we see tech often perform. You'll see it basically consolidate before the big news, and then the activity happens. So I think next week could be a time when people pivot back to AI, and we have a lot of these large tech names that have pulled back significantly, things like Microsoft and things like that. And if we get any kind of rebound in those as well, we could see leadership shift back to the NASDAQ. And I think that's very interesting. You mentioned the Russell being down. The NASDAQ, I think, just had its best week since the beginning of January and over a month here. So we've been in a little mini bear market for tech. There's been the worries about things like Blue Owl and these different, issues with data centers. But then next week we have AI, we have, Nvidia, and this is where the attention is going to return. So I think right now we have seen this kind of move toward things like the small caps and things like the value names. That might not be the case going forward. We might see that return to the growth at least for a period of time.
Yeah, you mentioned private credit concerns there in the name of Apollo, and you name-checked there Blue Owl Capital a few moments ago. Before we let you go, in about a minute left, what else will we be looking for? And we've been talking about the fact that the AI question has kind of rolled, right? It rocked commercial real estate. It rocked the software names. Now it kind of worked its way into private credit. What will you be looking for in the weeks ahead, David, to give you some confidence that we've steadied the ship despite all of this few weeks of volatility?
I think it's the hardware names, really, at the end of the day, that matter. And I'm talking about the names like the Microns and those kind of names, and the fiber optics as well. We've seen this continued strength in the fiber optic names. We are seeing that the data center construction continues one way or another. We're seeing it in other names like Caterpillar, which have this connection to data center. We're seeing all these power-related companies like Quanta Services that are involved in, electricity construction and upgrades. All this stuff is tied to the data center one way or another. So this is something where this freight train continues to move down the track. There's a lot of worries along the way. There's things that go bump in the night, but it's not breaking the underlying trend of what we're seeing. And this continues to filter across the stock market and across earnings. So I think ultimately what we're seeing is that if these big names, like your Seagates and your Microns, if those continue to show, because those are ancillary to AI, if those remain strong, which they have, it's telling us that the investment cycle is not broken yet. And unless we get some really unusual news or something dramatic, geopolitically, it's in a spot where the momentum remains in effect. We've had a long period of consolidation and a lot of worries, but it could resolve potentially to the upside.
Things that go bump in the night, spooky, ominous words here on a Friday, despite the fact we got major market gains. David Russell, terrific guest. Thanks for kicking off the broadcast. Please come back and see us here on Taking Stock anytime. David is Global Head of Market Strategy at TradeStation. You and I are going to head this way. Jeff will bring you the biggest analyst calls of the day for your Friday. First up, we were just talking about Microsoft. Citigroup reiterating MSFT as a buy. Analysts from Citi saying investors should buy the dip and the relative weakness we're seeing in Microsoft. Down fractionally on the day, down 17% so far here in 2026. Next up, Barclays initiating Eli Lilly at overweight. They call the pharmaceutical giant, quote, a market leader. Shares down for LOY on the day, also down about 6% so far here year to date. And finally, Wedbush reiterating Netflix as outperform, urging investors to remain calm and keep buying the stock, they say, as we await for final details on the Warner Brothers Discovery deal. Netflix up on the day almost 2%, but down 18% so far here in 2026. We'll keep the party rolling along. How about a look at a few NYSE notable companies? First up, GE Aerospace up 2.5%, up 4 days in a row. Morgan Stanley reiterating GE Aerospace is overweight. They say it sees multiple expansion. Their price target on the stock right now, $425, driven by strong pricing power and what they call a pristine balance sheet. Love that phrase, pristine balance sheet. How about this name over here, Jeff? We'll take a look at Live Nation, up more than 3% on the day. Morgan Stanley reiterating the stock is overweight. They raise its price target on the concert promoter up to $185 a share from a previous level at $170 following LYV's recent earnings call. All right, earlier this week, I sat down with the CIO of Bitwise, the one and only Matt Hogan. We talked a lot of things, tokenization, the state of stablecoins, the broader cryptocurrency market, far and away. One of my favorite interviews I've had in quite some time. Check out part one of my one-on-one with Matt Hogan. Let me kick things off with this. What do you feel investors have forgotten about what happened in 2018 and again in 2022, those Bitcoin sell-offs that kind of apply to what we're living through today?
I love the question. They've completely forgotten what it was like then, right? In 2018 and 2022, we were in desperate situations. There were no new positive narratives. People thought the world was ending. People had been in crypto, were leaving crypto. We're seeing all of that again. And yet, for some reason, crypto can't remember what happened in 2019 and 2023, which is that we kicked off a major bull market. There are reasons to believe we'll see that happen again. And it's funny to me that people can't see past their skis. They can't remember what happens when we turn the chapter to the next page.
Do you view the heavy selling we've had off the October highs pretty similar or dissimilar from the
It's
previous?
exactly the same, right? This is a textbook crypto winner, right? We peaked in October. We've sold off about 50%. It rhymes almost precisely with what happened in 2028 and 2022, except for there are a few negative catalysts back then that we don't have now. In 2022, we had an extremely hostile regulatory environment. The SEC was trying to crush crypto. In 2018, there were really no positive narratives to point to. Now we have a pro-crypto regulatory environment. We have stable coins booming. We have tokenization booming. We have AI finance coming online. We have DeFi being reborn. So we have a lot more to be optimistic about now than we did in those previous winters.
What is the strongest bull case for crypto over the next 12 months?
Well, the strongest bull case is that this is a classic crypto winner. It's an opportunity to get in low, and nothing has changed about the fundamental technology that makes it less useful. All finance is moving on chain. The SEC chair is saying that. Stable coins are going to be a multi-trillion-dollar market. The world is souring on fiat currencies. As we get past this classic crypto winner experience, I think we have so much to focus on. And I'd remind people, if you bought at the end of 2018, you're up 2,000%. If you bought at the end of 2022, you're up 300%. And that's after the pullback. Those are extraordinary returns. I see no reason why this time will be different.
What is the most realistic bear case people are not talking enough about?
Sure, if the Clarity Act fails in Congress, I think that will be seen as a setback. If concerns about quantum risk continue to rip, I think that will be a setback. If the broader equity market turns down, which there's every chance that that could happen, I think that would be a setback as well. I think of those as sort of Groundhog Day moments for this crypto winter. If it happens, we'll see our shadow and the bull market recovery will be delayed. It will not be denied. We will get there eventually, but I do think those three things could set us back and postpone the rally that I think is coming.
Phil Connors?
That's exactly right. Yep, that's the Clarity Act. That is the Phil Connors of crypto.
Stablecoin supply is stuck right now somewhere around 300 billion AUM. Is that a ceiling or is that a launch pad, Matt?
It's a launch pad. Look, the Genius Act, which governs stablecoins, which brings them into regulatory perimeter, doesn't even go into effect until January of next year. So we're still in the pre-Genius Act stablecoin world. We're going to see all of the growth. Ultimately, all dollars will be on chain. Ultimately, all payments will take place in stablecoins. Ultimately, we will crypto dollarize a huge part of the world. But even though the news narrative has moved on, it thinks we're in this pro-stablecoin regulatory environment. Again, the regulations aren't actually in place. So look, that number's going to $3 trillion in the next handful of years. There's nothing that's stopping that. We're just in the wait phase before that goes into effect.
Matt Hogan, CIO at Bitwise, very grateful for your generous time. Thanks for joining us today. Nice to have you as always.
Yeah, thanks for having me. This was fun.
Welcome back to this Friday edition of Taking Stock. I'm JD Durkin down here on the trading floor of the New York Stock Exchange. Our next guest also joins us remote, Ashley Ebersol, co-founder and chief legal officer at TX. Ashley, it is great to have you here joining Taking Stock. I want to get your perspective on what some people are calling crypto winter, ongoing crypto bear market. A lot of skepticism, a lot of concerns here, Ashley, given where the crypto majors have been trading off those Monday, October 6th highs. What do you make of where the crypto majors are today?
So first, JD, I want to thank you so much for having me on. It's great to be on FinTech TV again, and great to connect with you. Um, I think that the crypto winter characterization is certainly borne out by some of the price performance, but I think you got to put it in context of where we were after the substantial price buildup in 2025. That was obviously accompanied by a lot of new institutional products like ETFs coming online and building up demand and liquidity in the space, driving prices up. And then, crypto's a full scale financial market now. You saw a turn when geopolitics and other things led to institutional selling, and you saw the effects of that. And you've continued to see some volatility into 2026. So, you know, it's a volatile ride, and crypto is proving that it behaves like a legit, real financial market and is not immune to macro pressures.
Ashley, how is all this impacting your work at TX? And talk to us a bit more about your priorities here in early 2026 for anyone a bit unfamiliar with what TX is all about.
Sure. So TX was built on the thesis that the next big movement in the crypto space will be movement of real world assets on chain. There's obviously only one real way for that to happen, which is tokens that are backed by real world assets that represent them in some way. So TX is the unified marketplace for real world assets and operating system for the tokenization of real world assets. Think of us like Amazon as what we're aiming for to sort of own the overall operations in this space. Uh, where we are right now, from a policy perspective, in many ways couldn't be better. You've got a very supportive administration. You've got alignment across the various organs of our political system that are in favor of crypto, that want to see the United States remain a leader and remain competitive in crypto. That's going to be the same for asset tokenization as that market continues to evolve. And we look forward to remaining in that dialogue, remaining close to the regulatory changes, and riding the wave, I guess.
Right on. Hey, man, we'll all ride the wave here together. Before I let you go, agentic AI, we've already been talking about it in the cycle for quite some time, but really it's come to the forefront, I'd argue, especially the last few months. Is crypto the native currency inherently for more of an autonomous machine to machine, type of commerce under agentic AI?
Well, I think it's helpful to think about it from the perspective of if you have AI agents talking to each other, wanting to transact with each other, they're not going to do it in fiat. They're not going to do it on traditional bank rails. What is the natural way it's going to happen? It's going to happen through digital finance. And so, in addition to the huge shift that we see continuing into the RWA space, I do think that the continued interaction and enmeshing of agentic AI with crypto assets is only going to accelerate.
Ashley Ebersol, co-founder, chief legal officer at TX. Thank you for joining us on the Friday edition of the show. Have a terrific weekend. The rest of you watching, don't go anywhere. Much more Taking Stock coming up after this quick break. Welcome back to the show. Nidhi Gupta joins us now. She is the CEO and co-founder at GTO. She and her amazing team just got off the bell podium, officially ringing the closing bell down here on the floor of the New York Stock Exchange. She joins the broadcast now. Welcome. Nice to have you.
Thanks for having me, JD.
Can I get your perspective? What was it like up there to ring the closing bell, especially on a Friday? The energy's always a lot much better on a Friday.
Do you think we brought energy?
Absolutely. It's a great group.
So, I was just telling somebody that I wish I could say this is a dream come true, because who dreams of this shit, right? So it's amazing. Thank you, NYSE, for recognizing us. It's been a lot of hard work. I think just goes to prove two things. Good work does pay dividends. You get recognized for it, so thank you for that. And secondly, our mission is just so incredibly important, so we're getting recognized for the hard work that we're doing for our mission. Today we're celebrating surpassing 6,000 members in our network over 65 different countries. 100% of our growth has been organic, so just could not be more excited to be here.
How would you define the mission of that network, all those thousands of members and continuing to grow, and really what is tantamount? What are the core values to your work at GTO?
So let me ask you this, JD. Have you heard of this little thing called AI?
Yeah, once or twice. It's come up in
bit,
conversations recently. Yeah.
So how many engineers do you think are building that technology?
I'd have to imagine it's somewhere in the thousands.
Or potentially millions, you
Yeah,
would think,
much
right?
more.
Like all over the world.
Yeah.
But if you think what percentage of them are women? Less than 12% of engineers building a technology that is going to impact our way of being is women. Less than 9% of execs, engineering execs, who are in the driver's seat making decisions is women. And mind, again, this technology is what's going to define how we live in the future. That's the mission for GTO. Our goal, my goal, is to move that number from 9% to 20% in the next 10 years. And it's doable. Especially today, this is just so much more important than it's ever been, because our voices are being silenced, we're asked to be quiet, we're asked to not speak up. This is the moment where all of us seize our power and we make the change and make this a world that we want to see ourselves in.
Yeah, that's incredible, especially for such an important transformative technology, making sure you've removed as many of those implicit biases as possible, and representation is at the forefront of that emerging tech. What would your message be to leading influential business leaders, other CEOs who themselves are trying to figure out the new generation of AI-led technology?
Yeah, so I would say you have the seat, you have a voice. Please make that voice heard. And please make decisions that serve the entire population. This world is incredibly diverse. We need to serve every single human being on this planet, not just a particular demographic. That would be my ask of you.
Nidhi Gupta, CEO and co-founder of GTO. Let's give it up for our amazing guest down here. I want to say that. What an incredible job. Please come back to the NYSE anytime. Great to have you here on the show.
Wonderful. Thank you so much, JD. Really appreciate you having me here.
Absolutely. Enjoy your weekend. Don't go anywhere. Much more Taking Stock coming up from the big board right after this. Welcome back to the show on this Friday here at the New York Stock Exchange. The crypto majors, Bitcoin, Solana, ETH, all in positive territory as we round out our busy trading week. Next up, the Trump White House setting a deadline of March 1st to break the logjam on crypto market structure reform. It's a big topic of conversation down in our nation's capital, with negotiators racing to resolve a key dispute over stablecoin yield. And finally, OpenAI nearing the first phase of a huge fundraise that could exceed $100 billion, including $30 billion from NVIDIA alone, pushing the company's valuation towards the $850 billion mark. All right, now Scarlett Sieber of Money 2020 is back with Jargon Translator, putting fintech terminology into day-to-day language that anyone can understand. Take a look.
Welcome back. I'm Scarlett Sieber. In today's segment of Jargon Translator, we're going to be decoding a term that sounds like Apple's next big launch, but it is actually crypto's OG fundraising move, ICO, or initial coin offering. Oh, ICOs, the Wild West of fundraising, where fortunes were made and trust funds were lost. Picture this, it's 2017, Bitcoin is mooning, and suddenly every crypto project is like, we need cash to build the future. But instead of going to VCs or banks, they invent their own playbook, the ICOs. Here's the vibe. A startup creates a shiny new token, writes a white paper that promises to change the world, think Uber for blockchain, and then sells those tokens to the public. You send them Bitcoin or Ether, they send you their token. Boom, you're an early stage investor. Kind of. It's like crowdfunding meets Wall Street, but without the suits or the rules. No SEC filings, no IPO roadshows, just vibes and Telegram groups. And for a while, it was pure chaos. Billions raised, Lambos bought, and yes, scams everywhere. Why did people love it? 2 words, FOMO and moonshots. If you got in early and the token blew up, you were printing money. If not, well, you were basically buying magic beans. The next time someone flexes about getting into an ICO, remember, it wasn't an iPhone launch. It was crypto's version of Shark Tank, but without the sharks. That's your jargon translated. Back over to you.
Welcome back to the show. At this hour, the USA men's hockey team holding on to a 2-0 lead over Slovakia in its quarterfinals game. Next week here on Wall Street, I got to be honest, I'm on vacation. There will be other amazing guests filling in for me, though. Lots of Fed Speak on tap. On Tuesday night, the State of the Union address. You don't want to miss that out of Washington. On Thursday, jobless claims. On Friday, PPI data. Look at this slate of earnings set to hit the tape. We'll hear from Domino's, Hims, Home Depot, AMC, Kava, TJX, NVIDIA, and much more. That's going to do it for today's and this week's edition of Taking Stock. Have a great weekend. We'll see you Monday.